This is Attorney Tim Crawford, and I'm here today to give you a short presentation on the need to protect your financial assets so they are not forced to be spent on nursing home care. And the solution to it is simply to set up a trust where you transfer some, but not all, of your financial assets into the trust. So we're talking about the excess money you may have in a checking or savings account. We also talk about putting your CDs, your stocks, your bonds, your mutual funds, your brokerage accounts into the Financial Asset Protection Trust. We rarely would put in retirement plan assets into a Financial Asset Protection Trust. And the reason we don't want to do that is because you're not sick, you're not in the nursing home when we're doing this kind of planning. You're doing this kind of planning in advance before you have been ordered by your doctor into the nursing home. So this is advanced planning. We don't know if you're ever going to be sick. So we're very, very careful about, should you cash out all of your retirement plan assets, pay the tax on them, maybe at twice the normal rate, and then take what's left and put it into a Financial Asset Protection Trust. Many of our clients do not want to pay that extra tax burden, nor do they want to pay the tax now. So they want to wait, and that's obviously their choice. However, the risk they do run is if they do get sick, we are probably not going to be able to protect 100% of their retirement plan assets. So there's a little trade-off there, and you just have to think about that. Do I want to pay extra tax and get my money where it's going to be protected, or do I want to keep it where it's not protected? And boy, there are advantages and disadvantages to that on both sides. And I would strongly encourage you to contact our office at 262-634-6659 to discuss this further. Now, when we design this trust, there's a number of ways we can set it up. Many of our clients are used to taking the income from their investments and spending it. Well, federal law and state law here in Wisconsin allow us to set up a trust where we can have the income from the trust be payable to you. We call that an income only to parents trust. And the advantage to that is you still have your income. And that's what many of our clients like about that. The disadvantage to that is when you are in the nursing home, you're going to be required to spend all of your income on your care. And now that includes the income that's coming from this trust. So some of our clients who say, I really don't need the income from this trust. I have plenty of income coming in from my pension and Social Security, so I don't need the income from the trust. And in that situation, we will design the trust as a income only to children's trust. So what happens? The income that's earned is payable to the children. They get 100% of the income. Yes, the children then have to pay tax on it, but thank goodness we don't have 100% tax rates. So the kids will generally end up with 2/3 of the money still available to them. They can do that. They don't pay 100% of it in tax. But children are always concerned when we're designing these trusts, well, we'll have to pay tax on it. Will all the money I receive be used to pay taxes? And the short answer is no. Only a small part of it will be used to pay taxes. So again, in the design of the trust, we could either have the income flow to the parents and the parents pay the tax on it, or we have it flow to the children and the children pay tax on it. So we have choices in the design. What makes sense for you is, how do you think about, do I need that income? Could I get by without the income? So that's what we call our Financial Asset Protection Trust. We also have a separate trust where the home would be placed into it, and the home would be protected so that the home would never have to be spent or sold to pay for nursing home care costs. Here we're doing the financial asset protection trust for a very similar reason. If you own these financial assets and you get sick, you will spend them on your care. However, if you plan ahead and you put them into the financial asset protection trust, then you will not be spending them on your care. But it takes action on your part. You have to plan in advance. You have to plan even before you're sick. When do we encourage you to do this? Generally when you're 65 years or older, that you give serious thought to reducing the amount of excess assets you have. You notice you're not going to put everything you own into the financial asset protection trust. You're going to think very long and very hard before you cash out your retirement plan assets and put them in there. Generally, you don't do that. So, I would suggest you give our office a call and set up a free consultation to talk further about the Home Protection Trust, the Financial Asset Protection Trust. So very important that you plan in advance so that you do not bankrupt your spouse and so that you still have money that you can have when you're sick and in the nursing home. So again, call our office at 262-634-6659. That's Attorney Tim Crawford wishing you a good day. Thank you for listening.